What's going on, money lovers? Welcome back. So today we're going to be discussing whether or not it is too late to buy Amazon stock. Is it too late to buy Amazon stock? No. As a matter of fact, I just started a position. As you can see, this company has clearly run up quite a bit in the last few years. To buy it back in 2015, it was around $500-$600. You'd be up 600% right now. Those are huge gains. At the same time, what has changed? If anything, the entire picture has just gotten that much better. Amazon is not slowing down, expanding into many markets, and we're going to talk about all of that later on in this video. And why Amazon still has so far left to go. This is just the beginning. So while there is a huge amount of uncertainty right now, we're not totally sure what a Biden presidency will bring regarding tax hikes and if Amazon's going to start paying more taxes. What we are sure of is that there's always a level of uncertainty, and great companies persevere. Regarding a Biden presidency and all these talks of hiking taxes, Warren Buffett famously has said that we don't buy companies based on economic factors. We buy great companies because they're great companies. So while yes, it is worth taking a look at some of Biden's policies, you shouldn't determine your investment in Amazon based on a Biden presidency. Life goes on, that's just a reality. Presidencies don't destroy companies. A great company will continue to be a great company. If you hear anything else from the news or the media, it's just fear-mongering nonsense. With that being said, I'm not saying Amazon can do no wrong. I have had some gripes with Amazon. We have a bit of a love-hate relationship because while part of me thinks it's terrible that Amazon is running all these businesses, into the ground, I feel especially bad for mom and pop type stores than I do for the huge corporate chains who just didn't do their due diligence in keeping up with the times. Companies like Sears and soon to be Macy's, I'm looking at you. But at the same time, what has Amazon done? It has made so many things much more convenient. Now Jeff Bezos and the government can drop in and listen to what you're talking about as they please. I'm sorry, they've made things so convenient. Now you can save hours a week that you would have had to spend shopping on other things. You can use that time to start a hobby, spend more time with your kids by having your groceries and whatever else delivered to your doorstep. Does it get any more convenient than that? All right, well, now that I'm off my philosophical investing soapbox, let's get to the nitty-gritty and look at the numbers. So again, I emphasize. Is it too late to buy Amazon? Absolutely not. You should buy winners. Why waste your time trying to find the next Amazon when you can buy Amazon? Anytime you see an article, by the way, with a title like, "This is the next Amazon" or "This is the next Tesla," run the other way. Just because Amazon is $3,000 a share doesn't mean it's too expensive. Too many people make the mistake of punishing winners. What do I mean by that? Now, this has nothing to do with not being able to afford the share. That's another story. I can't go out and buy 10 shares of Amazon, but luckily we have fractional shares now. What I'm talking about, the real mistake people make is that they see Amazon, they see it's $3,000 a share, and they say, oh, it's too late. I missed the boat. I have to find the next best thing. I have to find the next Amazon. Wrong. Whether you buy one share of Amazon at $3,000 or you buy 100 shares of trash company B at $30 a share, and that company goes bankrupt, guess what? How much money you left up with? $0. What a perfect time to segue into the Amazon Prime logo. Prime. You shouldn't punish winners. There's a reason why Amazon is at the top. They're going to stay there. Amazon is really just getting started, I believe. They're still reinvesting the majority of their profits back into the business, which we'll discuss this a little bit more later on. And just look at how much they're growing from quarter to quarter and year over year. I'm going to take a look at their balance sheet later in the video. You look at cloud, data, AI, these fields are still in their infancy, and Amazon is a leader in the field. It's just the beginning. They also happen to be the fastest growing business segments that also are the most lucrative and have the highest profit margin. So while it's nice to stay the same in a utopian world, the only way forward is to advance and improve upon life, and that's exactly what Amazon is doing for us. The only way forward is through innovation and disruption. Take a look at something like ARK. That's been their core philosophy, and how's that worked out for them so far? Very well for them and their shareholders. Amazon fits into that same category. So while it's unfortunate that this may have a negative effect on some, the positive effect overall far outweighs the negative, and you can also look at it as a necessary evil. It's the only way we pave a sustainable path forward. Another thing I want to talk about is holiday shopping in the pandemic economy. Where do you think most people will be doing their holiday shopping from? I just saw this on news yesterday. Here it is again. Cyber Monday expected to be the biggest online shopping day in U.S. history. They predict consumers will spend between $10 and $12 billion on Monday, a 15 to 35% increase over last year's Cyber Monday. Oh, there it is. There's the Amazon packages, probably on their way to your doorstep. Analysts expect this year's Cyber Monday to be the king of online shopping days. All right, so I've really just talked about retail so far, which is a sector Amazon is dominating, and yet it's not even the most exciting one to me personally. We've got AI, cloud, data. Just wait until you see the insane growth rates for things like AWS or Amazon Web Services. We're going to look at all that in a little bit on the balance sheet. Next, I want to talk about Amazon's business model very briefly and how they're able to get so far ahead. And then we're going to look at their most recent Q3 earnings and their balance sheets. AI and cloud are just money-making machines, and Amazon has plenty of room left to grow. They're really just getting started. I know I keep saying that. So real quick, before we get to the balance sheet and the earnings, just want to talk really quick about Amazon's business model. And this article by Vox here did a pretty good job explaining it. So how does it work? How does Amazon get away with paying so little taxes and they keep growing? So Amazon purposely has kept their profits and free cash flows low by investing that money right back into its business. That's how they're able to expand and write off a lot of taxes, whereas other companies would spend that money on buybacks or keep it in cash, and they're losing a lot to taxes. So this enables them to expand and build data centers and upgrade their distribution networks, etc., without having to borrow money. Now, all of these investments have led to lines of businesses becoming feasible, like AWS cloud and computing and advertising, because they're much more profitable than its e-commerce segment, and they were able to use all this excess cash to start these business segments. Whereas traditional businesses have kind of just stuck in their one niche and stayed there forever until they go out of business. Amazon is adapting. They're always looking to innovate and improve, and this is how they've managed to stay at the top and why no one can catch up to them. All right, so on to our final segment here. Let's look at Amazon's Q3 earnings. Some very exciting things happened here. So if we take a look at their earnings for Q3, operating cash flow increased 56% to $55 billion in the trailing 12 months compared to $35 billion in the 12 months ended September 30, 2019. 56% growth. That is insane for a company this size to still be growing on such a great magnitude. Now, obviously, a lot of that had to do with the pandemic, but overall, I think that there is this general trend moving to, online shopping and convenience. And while I don't expect Amazon to grow quite as tremendously every year, they're going to still put up significant growth numbers, probably closer to 20 to 30%, I would say. Their free cash flow increased to almost $30 billion. That's enough money to probably buy quite a few S&P 500 companies. That's insane. Their net sales increased 37% to $96 billion in the third quarter. It says here 2 years ago, Amazon increased their minimum wage to $15 for all their employees. They've created over 400,000 jobs this year alone. They've had more customers than ever shopping early for holiday gifts, which is just one of the signs that this is going to be an unprecedented holiday season for Amazon sales. So some other highlights from the report: they added 100,000 new seasonal jobs with Amazon Air, logistics, fulfillment centers, sortation centers, is that a real word? And global specialty fulfillment teams in the US and Canada, 10,000 new permanent jobs in the UK, expanding in India. They are growing like there's no tomorrow. They're in full expansion mode. In Europe, Amazon announced it will add 1,800 electric delivery vehicles to its delivery fleet from Mercedes-Benz. Would like to see that as Tesla, but maybe one day. The largest order of electric vehicles from Mercedes-Benz vans to date, and they unveiled their first custom electric delivery vehicle, which was designed and built in partnership with Rivian. So very exciting stuff happening here. They're clearly moving towards sustainability. They're doing everything right. And this is the part I thought was especially interesting. It says their small and medium businesses in Amazon stores or third-party sellers surpassed $3.5 billion in sales on Prime Day, a nearly 60% year-over-year increase. Now, this is probably one of the most interesting things I found in the report, because you would imagine something like this, coming from a Shopify. But the fact that there are so many businesses moving to things like Amazon, it can only help them grow. And, these businesses aren't going to go out of business. They just need to adapt. The same can be said for Facebook. They're starting to do a lot with the Facebook Marketplace and helping out businesses. Shopify, these are all companies that are just one small segment of these companies, and it's poising them for great success. Great success. Now, as far as their fourth quarter guidance, they said net sales are expected to be between 112 and 121 billion, or to grow between 28 to 38% compared to the fourth quarter of 2019. So that's about pretty much in line with what I said before. I guess 20 to 30%, but they'll probably, one up it. Now, if we move down to their cash flows here, you see that in 2019, they brought in 22, almost 23 billion. 2020, they brought in 37 billion. That is ridiculous. That is a vast increase for a company this size. As far as their sales, it increased their total net sales from a little under 200 billion in 2019 to 260 billion. As you can see, AWS, Amazon Web Services, is where they do all their cloud business, and net sales went up from 25 billion to 32 billion. Their net sales growth in North America up quite a bit, as well as internationally. Now, interestingly enough, you've got to gauge your expectations. As you can see, AWS still growing quite a bit, but it didn't grow quite as much. 2019, you had 38% growth rate. 2020, only a 30% growth rate, which I say only as if we're talking about monopoly money. I mean, it's still incredible numbers. So it's still growing quite a bit, but just don't expect it to keep growing 30, 40, 50% a year. I would say 15, 20 ballpark, more realistic growth rate expectation for the AWS. That would be my conservative, estimate of the type of growth you can continue to expect. Now, it could very well outperform that, but that's a more sustainable growth rate. You can't keep growing 30, 40, 50% year after year. It's just not possible to sustain. Also, you have to take in mind that while AWS, even if the growth rate slows down, it's their most profitable segment. It has the highest profit margins. So even if it only grows slightly, it adds a lot to their bottom line numbers. Because it is a relatively new segment. It's still in its infancy, so it does have a lot of room to grow, but just, take it with a grain of salt. Don't expect to keep seeing 50% year over year. All right, so if you're still here, the last thing I wanted to touch on from their report that I thought was very interesting, again, is this third-party seller services grew 55% year over year. I would have never expected that. I would have thought by now that's not growing much. Amazon's, doing the bulk of the selling, but it just goes to show you they're continuously adapting. They're attracting new clients and ways of making money. Now, these are businesses who can sell their product through Amazon. Amazon takes a cut, but everybody wins in this scenario. And it's great for both. It's great for these businesses to continue thriving, and it's great for Amazon to continue increasing its revenue and its income streams. All right, I threw a lot at you. There's a lot of stuff. I can't even cover it all in one video. I mean, you've got, Blue Origin. There's so many other fascinating things going on with Amazon that maybe I'll save for a video in the future. So if you enjoyed the video, please don't forget to like and subscribe, and let me know what you think in the comments below. Are you buying Amazon? Why or why not? What other companies do you want to see an analysis of? This is Vinny from the Investment Club, and I'll see you next time.